Welcome to the podcast, Manu.
Thank you, Peter. Thanks for having me.
My pleasure. So let's get started by giving the listeners a little bit of background about yourself. You've got an interesting background. We're just chatting before we hit record here. Why don't you give us some of the highlights? How you got arrived in this country, and some of the highlights of your career today.
Sure. So I came to the US from France originally. I'm French by background. Don't hold it against me. I was born that way. But so came to the US for college at the courageous age of 17. I picked up US News and World Report and picked a university that happened to be University of Virginia and came to study here. And never wanted to leave Charlottesville. I did undergrad, a year of research, did grad school there. I was an engineer by background. Actually, I don't know if it's a little claim to fame, but I studied AI, if you will, did computer science and cognitive science undergrad, and then did systems engineering, which was really applied mathematics as a graduate degree. And then went on to Texas to work in commodity chemicals. And I think French people don't let other French people stay in Texas for too long, so I escaped and went to Massachusetts, worked in tech. Then went to INSEAD for business school. I really wanted sort of a global business education. And then after that, I joined McKinsey out of Brussels, out of all places, and ended up spending a lot of my time working in financial services and financial inclusion around the planet. So did mass market banking in the US and in Europe, did a lot of retail banking, private banking, development banking in sub-Saharan Africa and other places. Mm-hmm. And so I did that for 4 years and moved up the ranks at McKinsey. And then sort of my story starts to merge a little bit with almost this calling I had to start MPOWER. I say it's a calling because I think I'm an accidental entrepreneur.
Right.
I didn't really grow up wanting to be an entrepreneur. I was happily at the partner path, on the partner path at McKinsey. And one fine day, I get an email in my inbox from this student at the University of Virginia, my alma mater. And the student says the following. He reached out to me and a few other alumni were part of the same service organization. And he says, "Hey guys, I'm $500 short on my rent this month. I'm going to get evicted and I'm thinking about dropping out of school." And that really shook me because I'd experienced financial hardship going through college. I took a bunch of odd jobs like a lot of international students and pulled through with the help of my family. And then I financed my younger sister many years later. And then over the years, I saw countless friends and friends of friends not come to study here or drop out of school. And so the student who reached out to me in 2014 really, really shook me. I thought, why is this still an issue 15 years after I went to school? Why aren't banks doing anything about it? And then I looked in the mirror and I thought, well, I've experienced this multiple times. I'm an international student. I work in financial inclusion. Why am I not doing anything about it? And so I sent the student the money, but the challenge kept me up at night, and it kept me up enough that I decided to leave McKinsey and everything behind and focus on this full time. And so that was really the birth of MPOWER.
Interesting. So it's one thing to kind of have the idea that you need to do something about this, but did you kind of settle on this kind of student loan platform that you have now? I mean, what was the genesis of that particular, the way you've attacked this problem?
Sure. So once I had this idea that I obsessively couldn't get out of my head in early 2014, I decided to leave McKinsey. And the beautiful thing about McKinsey is they give you a couple months of sort of what they call search time. And you're supposed to search for an alternative employer. I was actually fleshing out the idea and the thinking behind MPOWER, and trying to better understand what business model might work, whether the market was large enough. I also teamed up with a friend of mine from INSEAD, from business school, called Mike Davis, who you interviewed many years back. Mm-hmm. His story is very inspiring. He was a political refugee, essentially, from Iran. His family had 45 minutes during the Iranian Revolution to really leave the country. His dad was the dean of a university in Iran. So it's, intellectuals were at the top of sort of the chopping block, if you will, during that time. So they fled, and Mike grew up on welfare, essentially in the middle of nowhere in the US. And I shouldn't say that, but he grew up in Iowa. And so he entered college at the age of 14. So really sort of a child prodigy. And really the difference between uh, sort of his socioeconomic condition as an early teenager and where he is today was education. It was that Purdue degree. And so, and plus, the importance of education was driven into him from his father, who obviously, as a dean of a university, was quite keen on the power of education for people. And so, the two of us joined forces after doing quite a bit of research, and that's really how we went into it.
Interesting. So, let's just take a step back. I want to look at sort of the whole international student community here in the US. You've I presume they can't apply for federal loans, right? Is that true? So do they have to kind of finance it in alternative ways? What are the biggest challenges for these kinds of international students?
Absolutely. And taking a step back, international students and immigrants in this country are a story of financial exclusion, right? They're left out of federal loans. They're left out of private student loans like Sallie Mae, right? Because typically they don't have a US citizen or permanent resident cosigner. We call that sort of a rich uncle that would be willing to take on that financial liability, that would be related in some way to the students, that would have the credit score necessary in the US to be the cosigner for the student. And so 99% of international students do not have access to those private student loans. And so what they're left with is either what I would call fairly mediocre loan options in the home country, typically requiring a home as collateral, that loan at a very high interest rate in rupees or reais or RMBs, just to pick on currencies with R's. That's really what the alternative is for them if they have access to that. Mind you, typically for a loan in the home country, you need to collect, like say you want $100,000 loan, you need a collateral that's about 5x that. So you need a $500,000 home in India.
Wow.
That's not exactly your average person's home out there. So they're left with very, very limited options. And so MPOWER, to some extent, is providing better options than what's available overseas. But more importantly, we're really providing access to students who have the academic and professional qualifications to come study here, but without our loan, just would not be able to come study in the US or Canada at all.
Right. So then is demand still strong from international students around the world?
Absolutely, ever stronger. So we have about 5 going on 6 million international students around the world. Holon IQ predicts that number will double over the next 6 or 7 years.
Wow.
And really, there's a few forces at play. One is a lot of young people, right? If you look at the demographics of young people, a lot of young people in sub-Saharan Africa, in South Asia, India, and so on, as well as Latin America. And so these young people are ambitious. They're moving up the socioeconomic ladder, if you will, and they want access to the same things that the affluent subsegment of the population has access to. They want the best education that they can possibly afford. Unfortunately, in their home country, graduate education typically has bottlenecks in terms of capacity, and it doesn't necessarily give them the step up professionally that a US or Canadian or Australian or UK degree might give them. And very well aware of that, someone from India or Brazil or sub-Saharan Africa with an undergrad degree, let's say in computer science, and a few years of experience in consulting, like technical consulting, for instance, or technology consulting rather, will want to apply to a top university in the US or Canada to further their career. So that's the primary force, is the demographic. So that's on the demand side, on the student side, but really on this side, so in North America, there's equal appetite for these students. As you probably know, domestic enrollment in the US is on the decline, right? Again, a function of the age pyramid, as well as just people questioning the value of a university degree here versus alternatives. So that means practically that there are empty seats in American classrooms, and vice versa. Universities are facing economic pressures. There's only so much they can increase tuition by. There's ethical and social pressures not to raise tuition too much. Students, American students, are ever more demanding in terms of quality of housing they want to get, 4-star lunches they want to get at the school cafeteria. So costs are going up. And so how do you solve this very difficult equation of revenues that are sort of plateauing for universities or going down with a declining enrollment and pressures on cost? Well, you can change it. At least one lever is to change the mix of students and let in more international students on your campus. So you have this very sort of hungry for international students university system in the US and Canada. And then obviously it wouldn't be great if nothing happened after graduation, but the truth is there's a massive talent shortage in the US. I mean, we feel it in technology. There's millions of nurses that the country needs. The whole medical system more broadly needs additional talent. And so international students can really come here, get trained, and then take on jobs that are very much needed to support the American economy and the American healthcare system.
Right, right. So then are people coming here, you were talking about like some people coming for like a master's. I presume you're available for 4-year undergrad degrees, right? And as well as masters. And what's the mix of the people that you work with?
The overwhelming majority of students we finance today are master's students, MBAs or masters in STEM fields. We do juniors and seniors at the undergrad degree.
Okay.
Typically, that would be someone who went 2 years in a community college and is now transferring to a 4-year school and faces a tougher sort of price tag, or someone who is at a 4-year college and junior or senior year, they're facing financial hardship and they need an extra 10 or 20 or $40,000 in order to graduate. Right, so that's really our focus.
Okay, but the bulk is, it sounds like, the master's programs. Then are you like, how are you underwriting these people? I mean, I presume some of them go, I guess, straight into a master's program without much of a time in the workforce. So what data are you using to underwrite?
Sure. And it's funny because we really think of ourselves as a data company. So the reason we're able to underwrite all these students is not because we have some magical powers. I wish we did, but it's really because we have massively more data on these students than any other lender on the planet. So we're the only lender in the world that picks up not only US or Canadian credit history on these students if they have it, but also home country credit history. And then we layer on top of that educational data, employment data, work authorization data, financial data. And with all of that information, we're able to make a credit decision where typically others cannot. So that's really the bread and butter for us.
So then, like, what is it that leads to a positive decision? And maybe conversely, what will you not approve for those? You know, what's sort of the trying to get a sense of the criteria that is most important?
Yeah, what's critical for us and what actually has, I think, positive ramifications for the US educational system and like traditional student loans is we want students to have gainful employment after their degree. So we really think of degrees as an investment. And granted, from a social or philosophical standpoint, there's other ways to think of degrees, right? Like someone who is studying art, will have a positive contribution on society, et cetera. But as a lender, from a purely economic standpoint, we're looking at what are you investing and what are you getting in return. And so someone, to your point, who gets approved is someone who has a very clear, bright financial future ahead of herself or himself. So they're studying engineering, computer science, business, or they're top of their field in another division. We finance students who wanted to be movie producers or others, but where there's a very clear, tangible path to employment. They might have interned at Universal during their degree. So that's sort of a happy example. A student we won't finance is typically a student where the debt burden would be too much, considering their future earnings. We wouldn't be doing the student a favor if we were financing $100,000 for a degree where we thought they might make like $40,000 after graduating, right? And they would be very much stranded from a cash standpoint. That's not helping the student. So, by that logic, we're very much in favor of, on the domestic side, sort of caps on graduate education loans from the federal government. We think that actually that would be healthy for the students as well as for the taxpayers. So there are very real sort of implications to our thinking for the domestic side of things as well.
Right. So then do you price your loans based on future earnings potential? Like if someone's got a computer science degree and, and they're going for a master's, they are clearly going to get probably a pretty high paying job after they graduate, but versus someone else who may, still may be like, a movie producer or something. It may be a little bit less certain. I mean, does that go into pricing?
Today, those factors influence the chances of approval and the approved amount. They don't influence pricing. We always fight to get as cheap of pricing as we can get based on our own cost of capital. Right. And we've simplified pricing also from an operations standpoint, just to be able to scale efficiently.
Okay.
But that is an area of opportunity for us as a company.
Right. So then what is your pricing? What are the typical loan terms? Are these, how long are we going out? What's the amount? That sort of thing.
Sure. The philosophy we had is when we created MPOWER almost a decade ago is to provide international students who are excluded from the financial system the same sort, from a look and feel standpoint, the same sort of loan product that their peers were getting with a Sallie Mae or a Discover Financial. So it's a 12.5-year loan, meaning 2 years while in school, 6 months of grace period, and then 10-year linear amortization. The rate today is 12.99. It's a fixed rate loan. So there's no surprises as interest rates rise. What may be different with our loans is the students make interest payments while they're in school. Mm-hmm. And the reason for that is severalfold. One is a lot of these students don't have access to loans to start off with because they don't have a credit history. And making these payments while in school allows them to build that credit history and get access to credit card products or get access to a car loan, or even just get, I think before this podcast, you and I were talking about, access to an apartment, right? To be able to rent an apartment, typically the landlord will run a credit check on you. And having at least the beginnings of a credit history can help in that way. So that's why we require in-school payments. The other part is so they don't accumulate interest on top of interest. The last thing you want as a student is to start with a $50,000 loan, and then you graduate 2 years later, and all of a sudden you have a $75,000 loan or something either higher because you're interest capitalized. Mm-hmm. And so paying it off really makes a big difference for these students.
Right. So then, do people need to have like a social security number or a bank account? What do they need to have to get this loan?
Those are not required. And actually we help them. We have bank partners. So we try to help, sort of welcome international students in the US financial system. So we might refer them to a bank product that we trust, or a credit card product that we trust, that doesn't require, for instance, a security deposit in order to borrow against that. So there are credit card products today that aren't secured credit cards, but that will actually lend you as an international student up to a certain balance. So we try to guide them almost like a nerd wallet for international students, if you will.
Right. Interesting. So then, are you then, like, what happens once your borrower has graduated? Do you provide more services then? Are you helping them find a job? What are you doing to help?
Absolutely. So our value proposition, in addition to building credit and providing no cosigner, no collateral loans, right? Really like streamlining the process and basing it on the student's future potential. The other value adds we have is we help them with the visa process coming into the US and Canada. So we'll write support letters, and we do that for free. There's no application fee. There's no sort of support letter fee or anything like that. Most of that is automated for us. We've streamlined the cost on our end to be as efficient in helping these students as possible. So we help them with the immigration process coming in. But on the other side, when they're in school, that they're graduating, we help with resume reviews, mock interviews, partnerships with third parties that help place international students. There's a healthy but very much sort of defined set of employers that will sponsor H-1Bs in the US.
Yep.
or that will welcome international talent in Canada. And so we're working as hard as we can to essentially help them apply to these employers, help guide them navigating the, as you experienced with an L1 visa coming here, and I experienced as well with an L1 and prior to that H1Bs. It is a complex immigration system when you're coming from overseas, and whether you're coming directly or transitioning from an F1 student visa to an H1B visa, etc., it's still complicated. And we're not equipped internally to provide guidance. We write blogs or facilitate blogs from immigration law firms. We put students in touch with free webinars from immigration law firms, and they can choose to work with one lawyer and another on a fee basis if they decide to go further. But we try to at least facilitate these conversations and guide them in the right place.
Yes, having navigated that, it's quite a couple of decades ago now, that it is a challenging thing to navigate the immigration system, and I imagine even more so for students. What percentage of the students stay in this country after they graduate? I mean, you must keep track of these people, trying to get, you're getting repayments back. Where do they go?
Absolutely. So 85% of the students we finance stay in the US, even 4 years post-graduation. So now that we have 10 years worth of data, we're able to look really down the line. That's also a function of the students we finance. We try to optimize where we think we're the best option on the market for students who want to stay in North America. If a student wants to go back to India or Brazil or China or elsewhere, there are tax advantages and maybe other advantages in terms of convenience in them taking a loan from their home country. But if they want to work in the US or Canada, then there's obviously major advantages to working with us in that it's more convenient. They earn in dollars, they pay back in dollars, they build their credit here, depending on their income thresholds, that there may be tax advantages and so on. So we're very much the best option for students who want to stay and work in North America.
Right. So I'm interested in loan performance. I don't know how much what you can share, but particularly those, like, you've got 85% staying here. I imagine it's a much simpler process for, they're establishing a credit score. They're going to be motivated to pay you back. But what about the 15% that leave? Are they harder to to track and harder to obtain full payment of the loan? I mean, what's been your experience?
Sure. It's really interesting because I think that it's a major fear in the US of like what happens when you leave the country. And in reality, what we see is, going back to Mumbai or Rio or what have you isn't really that different from studying in Seattle and working in DC afterwards to some extent. At least in our experience, we've worked very hard over the past decade to really flatten the planet in terms of payments, right? So we work with the likes of Flywire or TransferWise, now called Wise, in order to facilitate payments and make those as seamless as possible with our servicer. We collect a lot of information upstream with the students. Some of them choose to continue to replenish their US bank accounts and they stay on auto ACH, and there's a financial incentive for that. So we've worked very hard to make it seamless, regardless of where on the planet the students are. And the performance of students leaving is not as strong as the students staying, but it's also not sort of the abysmal performance that some might imagine, or like, oh, who is paying when they're overseas? No, it's actually fairly strong. And what's also interesting is I have this conversation with folks all the time. I think we tend to think of students either staying or going back to their home country. And the reality is a lot more nuanced than that. So someone coming from India to study in the US may actually work in Canada afterwards. Canada recently publicized they were very hungry for all the H-1B workers in the US. And we have some students who get Canadian permanent residencies, having studied in the US, faster than they're getting a US work visa, which to me is crazy and says more about the US immigration system than anything else. We have some students who, again, from taking this example from India to the US, will go and work in the UAE or Germany or the UK or Australia. So that, again, in this idea of the world has flattened a lot, there are a lot of options between the home country and the US. And so that 15% is intellectually fascinating to me, because I think they're very creative around what they do and where they work from.
Interesting. So then I saw earlier this year that you secured a debt round from Goldman Sachs. Congratulations.
Thank you.
But I want to know how you're funding these loans. Obviously, the Goldman Sachs line is probably dominant in that, but I presume you don't just have that. I mean, how are you funding the loans?
Absolutely. So today we have two large warehouse lines, one from Goldman, the other one from Deutsche Bank. We've over the past decade, we've sort of gone with ever bigger warehouse lines as we've grown in size. And then over the past year and a half, we hired a head of capital markets. We hired a CFO, Rob Partlow, who was the previous CFO of GreenSky. And so we've really matured our capital market strategy. And so, yes, we're getting ever bigger warehouse lines, but really we're also edging closer over the next 12 months towards a first securitization, whole loan sales, and so on. So you should see a few announcements from us in the press over the next 12 months. We tend to be not a discrete company. Loud would be a strong word, but fairly transparent is probably the right way to position it.
Right. Okay. So then what is the scale you're at today? I mean, how many loans are you processing?
So we're financing 10,000 students this year alone.
Wow.
Yeah. So I like to think about it, and I asked my own team, is like, picture how large your high school was or your college. I went to UVA, and at the time UVA had about 10,000 undergrad students. And it really gets me excited to think that this is the size of impact we're having today, and that we can continue to double it or triple it next year.
Right. And what's the average loan size?
The average loan size today is about $40,000.
$40,000. Okay. That's a lot of money out the door. Okay. So switching gears, you recently became a B Corporation, which I was really interested to read. What was the thinking there?
We were always an impact-minded and mission-driven company. We incorporated in 2014 as a public benefit corporation in Delaware. That status had been available in Delaware only for a few years, so in that way, we're a little bit of a pioneer. And we were GERS rated or GERS certified very early on, also by the B Corporation. And so we always had a very strong commitment to impact. It's really the calling that I felt when I created MPOWER. It was always about helping students. It was not, I wouldn't say it wasn't about making money. That's certainly a goal we have as well, but we don't think these are contradictory objectives. So there's always a very strong sense of mission. And the idea that we wanted to scale this mission. Now, the B certification was sort of overdue for us. We wanted to, and we started this process about 2-3 years ago. It took us 2 years to complete. It's a fairly long set of exchanges with the organization in charge of it. And we managed to get B certified. And again, the reason for it is it really affirms or further affirms our mission. So it's again, there's no structural change in terms of MPOWER. We continue to do what we do. But it's just another important message to the world around our commitment to impact. And that commitment is true and clear from the partners that we choose to work with, the investor sets that we have. We have a mix of very much for-profit minded investors, both on the loan capital side and the cap table on the equity side. As well as impact-minded investors or emerging market-minded investors. Mm-hmm. So that's why we chose to go that route and get B certified.
Interesting. So last question. I mean, you've got 10,000 students that you're doing this year. I mean, obviously, you got a large target market. You can certainly grow this company, multiple times over before scratching the surface of the whole market. But I'd love to get your sense of what is your vision for the future of MPOWER?
Sure. Yeah, and to your point, we're financing 10,000 students this year. There's 1 million international students in the US and Canada. Between the growth and raw number of students, and the growth in cost of tuition, especially in Canada, as tuition prices start to more and more resemble the US tuition prices, there's 8 to 12% annual growth. So we could finance a third of just the sheer growth in the US and Canada and triple in size just by doing that, not even tackling the core market. So we're going to be busy for a while. With that said, 3, 5, 10 years out, I'd love for us to be a neobank for global citizens. And I hate to use the buzzword neobank. I think it's overused. But I think it really applies here. It's really, how do we offer people like, candidly, like you or I, a suite of financial products that helps them sort of consolidate in one place their global financial footprint, if you will. So how do I give you a checking account that holds Australian dollars and US dollars? How do I provide you with a credit card that you can use here, but also in Australia without crazy Forex fees or other fees? How do I make it easy for you to transfer money back and forth between here and your home country? How do I provide you with a health insurance that protects you around the planet? And so I think there's a whole slew of financial products that is needed. What's interesting, and I think our advantage in, again, far down the future, moving and becoming a neobank for global citizens, is we're really meeting customers, students today at their entry point, not just in the US educational system, but in the US financial system. Like I said, we're building their credit, et cetera. And they don't just need a loan from us. They need a checking account, a savings account, health insurance, and so on. And so I really do think that there's an organic need for us to do more for that demographic. We're just one tiny company today with a lot of work on our to do and a lot of growth. And so we're very focused on our core, but it's a huge opportunity as we continue to scale.
Right, sure is. Well, we'll have to leave it there, Manu. It was great chatting with you. Really enjoyed hearing your story and learning more about MPOWER. Best of luck to you. And yeah, I'd like to let's stay in touch.
Absolutely, Peter. Thanks for having me again.
Okay. See ya.
Cheers.